Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 9th of June. All right, now you know the markets are desperate for something when they are jumping on the rise there in the jobless claims in the US, right? This is a weekly number. You go back a number of years, it was just a zero number. But now, you know what? When the market's in the balance and they're waiting, patiently for the CPI numbers next week, they sort of gravitate towards anything. But right now in the Asian session, we have a risk-off sentiment, very clear as day, okay? US equity futures down, Euro, Sterling, Aussie, Kiwi down, and the dollar up. Now, don't get overly excited. The moves here are pretty muted. And that's probably because what we saw overnight or through the North American session is some pretty sort of unexpected moves on some weak data, right? Let me just have a look at the Forex markets first of all. See, that moved down in the dollar index, okay? And obviously that coincides with the move up in Euro, a little bit of a dribble down in dollar yen, dollar Swiss took its medicine, and you've got dollar CAD down here as well. Now, we do have the Bank of Canada, that was yesterday or the day before, can't even remember these days. Now, we do have the employment numbers out of Canada. Now, the Bank of Canada raised interest rates, suggested there was going to be more coming. So this number really does play into what the statement was, and it's fresh in the market's hands, right? So strong numbers goes very much towards, what the Bank of Canada was saying. You'd expect the CAD to go up. That means dollar CAD down. But if these numbers are coming in very weak, well, it's a bit of a slap in the face to the Bank of Canada, and we could see a bit of a reversal there. Maybe dollar CAD goes back up. Now, Sterling also a little bit up. Aussie and Kiwi, well, they're up a little bit, but not as dramatic as the swift move there on Euro and the dollar index, right? Which basically tells me there was a big buildup of positions here, and that jobless number was a little bottleneck release, and that's what you get. It's like one of those weird ones, right? So some of these numbers, I would call the jobless claims number probably on the edge of like a tier 3 number, maybe tier 2 these days because there's a little bit more going on, but it's not like a wham, bam, thank you, ma'am, non-farm payrolls, right? And look at the change here. It's 235 expected, and it came in at 261. So it's not that big a difference, right? There's either something else going on behind the scenes that we can't see, or, you know what, the market is really desperate for a trading opportunity. Now, where does that leave us now? So as we come into the North or European and North American sessions, we've got a couple of ECB officials speaking there. Do I think they're going to impact? No, but you know what? Stranger things have happened. The main sort of release for the markets will be the Canadian employment numbers. Okay, as I said just a second ago, the Bank of Canada have suggested more rate hiking is due. If we get strong numbers here, we're going to see the CAD appreciate. So CAD go up against the crosses, and dollar CAD, well, that should go down, and vice versa if the numbers are weak, right? So this is the go-to. And it's a pretty good trading opportunity, right? It's not like, now there's a number of different components. I was going to say, it's not like the non-farm payrolls. There are a lot of features here, but the two main parts are the top parts here, unemployment rate and unemployment change. Now, once the market has traded, they will have a look at what component the full-time employment change is. And I mean, they may weigh up part-time, but that's not much here, neither here nor there. It's really these two components here that will dominate the move, okay? And that's all she wrote at this point, because until then, a lot of traders I've spoken to at numerous banks are just sitting back waiting for next week's CPI numbers, and that's the main game, right? This stuff down here, highly, it's going to be very big. We've got the geopolitical stuff out of the way in the US. We've got a lot of resolutions on things. We're now looking to see what the Fed are going to do, and that's what these inflation numbers are going to do for us. So today, I wouldn't say this is like a trend-changing opportunity, but I tell you what, the easiest trade is with the trend. Now, when you are looking at, if I just bring you over the charts, now just looking at, bear in mind what the Bank of Canada has been doing. I'll just focus on dollar CAD. Right, so the short-term trend has been down. Now, this doesn't work nicely with this because oil has just sort of rallied a bit, which is going to put a bit of upward pressure on dollar CAD. So it is sitting here trying to work out what's going on. Here's the knee-jerk reaction after the Bank of Canada rate hike. Does it continue? We'll have to wait and see. If oil started going this way and we got strong employment numbers, well, definitely lower, right? But at the same time, if oil doesn't come to the party, then it may be a short-term trading opportunity. In fact, weak numbers works with the move in oil, and we might see a little move to the top side. And that's pretty much all we've got, guys. You can't make the market give you cash that just isn't there, right? And you look across the board here, to me, it's pretty confusing markets. I mean, of course, this looks very easy after the fact, but as I said, it's a tier 2, tier 3 number. You wouldn't expect it, in normal market conditions, right? So that's where we are. There's just been a little flush out of different positions across a few different instruments. The market's primed for next week's Tuesday's US CPI numbers. Dollar CAD is the key here. If you are looking for a trading opportunity, outside of that, I'll just be watching the markets and see how the US equities are traveling. If you start to see a move here on, say, on the equity markets, then you might see that correspond with the cryptos. You'll definitely see it across the other global equity markets, and it may well work into a risk on or risk off profile in the majors, and that's where your move is. All right. So actually, just on that, there was one other thing I forgot to mention was the yields, drop in yields on the US bonds. Okay, that adds to that sort of wicked sort of dollar scenario. So this is all we've got, guys, at the moment. It's not ideal, but you know what? If I was in Canada, I'd be frothing on the employment numbers. As I said, those two top numbers are the ones you want. If they're both in line, like both strong or both weak, you can have a good trading opportunity potentially. All right, guys, have a good one. Have a good weekend. All the best. Cheerio.